tell you about the public finance, private finance, and the difference between the public finance and the private finance. Basically, what is public finance, what is private finance, and the difference. All the expenditures, the government, and the income that they get, and deals with the adjustment therein is known as the public finance. Basically, what are the expenses of the government, what are the income of the government, and their dealing with the income and expenditure is known as public finance. Same is the case with the private finance. What is basically the private finance? Private finance is somehow like, if we talk about the private finance is what household do. Household mean man or a single member of the community, are the expenses that is carried out by the private sector. So basically what we talk about is the income we get, and this income, how we consume that income to buy goods, to pay utilities, to or all the basic needs. How we manage our basically our finance within the house or within the firm, which is privately owned, is known as public finance. Now, in this video, we will talk about the difference between the public finance and the private finance and how they are linked with each other. So stay tuned with us to see the difference between the public finance and the private finance. In this video, we will talk about the difference between the public finance and the private finance. So if we talk about the adjustment of income and expenditure, the first heading goes income and expenditure. Defines the expenditure according to the revenue. If we talk about the individual, they get their income and they carry out case with the public finance. Public finance approaches is to estimate the amount of total expenditure and then meet the expenditure through multiple possible ways. There are the different possible ways. For instance, when an individual knows his fixed income and spend his money accordingly, they carry out, if we talk about they first carry out expenditure, expense, and then they generate taxes according to that expenditure to meet the income, same income. So basically the both steps are same, but they are reversed. In case of the public finance and the private finance, is budgeting, how the budgeting is carried out within the public finance and the private finance. So the public authorities need to budget on yearly basis. It is liability for the public authorities to carry out to make budget. However, individuals have no such restriction. However, beside an individual, if he makes budget, they would rather like to follow a balanced budgeting approach and would prefer having surplus at the end of the period than a deficit. But in case of the public authorities, it is not necessarily balanced. So if we talk about private, like public, they have to yearly basis, mandatory, non-mandatory. Follow the budget, they get surplus, and that they're gonna follow, because the reason beyond is that there may be any case of problem faced by the country, like coronavirus is now here, so they have to not look for the balanced budget, but they have to look for the expenses that they carry out to save the peoples, the community from the COVID. So basically, it is the responsibility of the public or the government to work for the welfare of the society. So they don't need to look for the balanced budget, though it is there. They should follow this, but this is not possible in case of like any case of starvation or any case of a pandemic. So they have to break this rule in order to save the lives of the people. That is borrowing, that how they carry out borrowing. Another important difference in the financing resources available for both, basically how they borrow. If we talk about the private and the public, private has the only internal source of borrowing because they can only borrow from the commercial bank within the country, but they have the option of both home borrowing and international borrowing. I'll give you an example. If the public needs anything, they put their papers or their like thingy properties in central bank, and they can have the to run the business. But they have the limited period of time. After like 1 year, if they make an agreement, after 1 year they have to return the amount to get the properties back. So, and secondly, the option is international, like IMF, World Bank. They can also have financing from the World Bank and IMF, but private sector do not have this option of having IMF, which is works internationally, or the World Bank. Like, what is the difference between the public finance and private finance? Is that there is a difference for deficit financing. What is deficit financing? If we talk about the public do not have any possibility to carry out or the print notes or the printing currency. Sorry, here is difference between the public and private financing. Option 4 is the deficit financing. What is the difference between the public and the private? Private never had the ability to print notes. It can only be done by the government. Government, in case of having deficit or having problem, they can print note to meet the expenditure. So this is only the quality of the government to print notes, and it is not given to the private sector. The fifth difference between the public and private finance. What is public role and what is the private role? They both have different objectives, but overall, if we say ultimately they both have similar role. How it is similar, that the public private sector is only for the welfare of personal welfare, like an individual. They serve for household, all the members of the house. They provide food, they provide place to live. They also provide the feces of their children, and that is the basically the objective of the private sector. Similar way, there is a same role by the public, but public have to work for the whole nation. Facilities like public parks, schools, hospitals, government hospitals that are free of cost. So this is the difference between the public and private finance, but ultimately it is not a big difference. It is basically they provide resources for a limited portion of the community, and they provide the overall community as they are the leader of the nation. Secrecy. If we talk about the public and if we talk about the private, there is no secrecy in case of public, and there is secrecy in case of private. How we explain this concept? If there is a financial statement which is carried by the government, that how many expenditures and how many income, basically the net profit. It is always mandatory to show the net profit and the net income and the expenditure, net of income and the expenditure to the should be published, and it is mandatory again to show the true and fair position of the business, or the business matter means country. And it can also be like in a public organization. It is not just a country. Public organization, like if PIA is a public owned company, then they have to show their income and expenditure to the overall nation to show the true and the fair position of the business. So if we talk about the private organization, private do not mandatory. Purpose, they do not need to publish. They cannot publish. But somehow, in case of few of the laws of the company ordinance, company income team, there are few of the changes that is made that a private organization should have to publish their income and expenditures, basically the financial statement, to show the true and fair position. That may be just because of having taken a tax and for the tax purpose. So there is a difference that they have to show their overall business, but according to that economic subject, it is not mandatory for the private organization to show their income statement and the balance sheet to the economy. So this is all from today's video. Please like my video and subscribe my channel. Have a good day.